Hello, hi students. So in this video, we'll try to continue on Ind AS 116 concepts. So here we try to particularly cover how accounting for lease in the books of lessee can be done under Ind AS 116. So we'll take few examples. So first on the illustration 27, here we can see how the initial measurement of lease liability should be recognized in the books of lessee. Okay, so here entity L enters into a lease for 10 years with a single lease payment payable at the beginning of each year. Okay, and initial lease payment is 100,000 and lease payment will increase by the rate of LIBOR each year. At the end of the commencement of the lease, LIBOR is 2%. So assume that the interest rate implicit in the lease is 5%. So how the lease liability initially is measured? Okay, so in this it's given that the lease payment is 100,000 initially, and every year the lease is increased by 2%. So second year it will be 1,02,000, and from there on 1,02,000 another 2% will become 1,04,040. So like that every year 2% is increased, and the final 10th year rent payment will come to 1,19,509. So these are the various lease rental being paid year on year. And it's given that the discount factor is 5%. So the discount factor will be applied to determine the present value of all these lease payments. Okay, so year 1 generally the factor is 1. So 100,000 into 1 is 100,000. So present value of first year lease payment is 100,000. And second year 1,02,000 is the lease payment, but present value should be calculated at the rate of 0.952. So this 0.952 basically 1 by 1.05 you will get 0.952. So 0.952 on 1,02,000 you will get 97,102. And second year the payment will be 1,04,040, and this 0.907 it's basically 0.952 divided by 1.05 you will get 0.907. So 1,04,040 multiplied by 0.907 you will get 94,364. So like that every year you have to calculate. So this 0.864 is basically the previous year divided by 1.05, and fifth year will be 0.864 divided by 1.05, you will get 0.823. So like that you can get the discount rate. Okay, and the total of all the present value is 887. So 8,80,887 is the present value of all the lease payment being done. Okay, so therefore the lease liability initially measured at 8,80,887. So this is the initial measurement. Okay, we'll take one more example. So here entity Y and entity Z enters into 12-year lease of a rail car with the following terms on 1st Jan 2021. So the lease commencement date is 1st February 2021, and entity Y must pay entity Z first monthly rental payment 10,000 upon execution of the lease, and entity Z will pay entity Y 50,000 cash incentive to enter into the lease payable upon lease execution, and entity Y incurred 1,000 rupees as the initial direct cost, which are payable on 1st February 2021. Okay, and entity Y calculated the initial lease liability as the present value of the lease payment discounted using its incremental borrowing rate, because the rate implicit in the lease could not be readily determined. So initial lease liability it's given as 8,50,000 rupees. So now we'll have to compute how lessee company measure and record this lease. Okay, so here it's given that 850,000 is the initial measured lease liability, so that you have to take into account. And from 850,000 you can add the additional payment of 10,000 being done to entity Z at the beginning before the commencement date. And entity Y also receives a 50,000 rupees kind of incentive, so that can be reduced from the initially measured lease liability. And the entity Y direct cost of 1,000 needs to be added. So sum of all these three adjustment is 811,000 is the initial measurement of the leased asset. Okay, so we'll take one more example. So here company H leases an aircraft for a period of 5 years. The aircraft must undergo a planned check after every 100,000 flying hours. At the end of the lease, company H must have check performed or refund the cost to the lessor irrespective of the actual number of flight hours. So what are the lease payment for the purpose of calculation of ROE asset? So here at the end of the lease period, there is an obligation on the lessee that a planned check needs to be performed before the asset is returned back to the lessor. So what are the costs incurred for the planned check at the end of the lease term needs to be added as part of the ROU asset. Okay. Okay, we'll take another example. So here entity ABC, the lessee, enters into a 3-year lease equipment. Entity ABC agrees to make the following annual payment at the end of each year. So 20,000 year 1 and 30,000 year 2 and 50,000 year 3. So for simplicity purposes, there are no other elements to the lease payment like purchase options, lease incentives from the lessor or initial direct cost. Assumed a discount rate of 12%, which is entity ABC's incremental borrowing rate, because the interest rate implicit in the lease cannot be readily determined, and entity ABC depreciates the ROE assets on a straight line basis over the lease term. Okay, so now we'll have to calculate how entity ABC would account for the said lease under Ind AS 116. Okay, it's very simple. So here you have the lease rental to be paid for the 3 years. Year 1 20,000, year 2 30,000 and year 3 50,000, and total lease payment is 100,000, and discount factor is given as 12%. So first year discount factor will be, since the lease rental will be paid at the end of the year, you have to calculate the present value of 20,000 at the beginning of the lease. So you have to apply 12% even for the first year. So 1 divided by 1.12, you will get 0.8929, and 0.8929 divided by 1.12, you will get 0.7972, and 0.7972 divided by 1.12, you will get 0.7118. So these are the discount factors. So present value will be 20,000 multiplied by 0.8929 will be the present value of 20,000 rupees, that is 17,858. Similarly for 30,000 you will get 23,916, and for 50,000 you will get 35,990, and sum of the present value of all the 3-year lease payment comes to 77,364. Okay, so 77,364 is the value of lease at the beginning of the lease term. Okay, so then the lease liability should be accounted for. So initially the lease liability is measured at 77,364, and then interest expenses. So interest is 12%. So 12% of 77,364, you will get 9,284, and the first year lease payment is 20,000 rupees. So from the opening balance, you have to add the interest and subtract the lease payment. You will get closing balance of 66,648. So this 66,648 will become opening balance for the second year, and on 66,648 you have to calculate 12% interest, that comes to 7,998, and lease payment for second year is 30,000 rupees. So opening balance plus interest minus payment, you will get closing balance 44,646. That becomes the opening balance for the next year. So similarly on 44,646 you have to calculate interest at 12%, that approximately comes to 5,354, and you are paying 50,000. So at the end of the lease term you will get zero lease liability. So that should be the objective. So the total lease expense will be sum of the all interest payment. Okay, similarly the ROE asset also initially measured at 77,364, and then you will depreciate on a straight line basis over 3 years. So 77,364 divided by 3, you will get 25,788. So closing balance will be 51,576. That becomes opening for second year. The second year also same depreciation. So you will get closing balance 25,788. That becomes third year opening balance. Third year its depreciation is 25,788, and at the end of the lease term, your ROE asset will become zero balance. So here the lease expense is sum of the all depreciation for the 3 years. Okay, so here we can also show the entries, how the journal entry should be passed in the books of lessee. So initially the ROE assets, ROE means right to use. So right to use asset needs to be recognized at the initially recognized value of 77,364. So ROE asset is debited by 77,364 and the equivalent liability is created for 77,364. So this is the initial measurement, and subsequently you have to account for the interest expense and depreciation. So first year interest expense as per our working comes to 9284. So interest expense should be debited to this extent and lease liability should be credited. And depreciation for the first year, you have to debit depreciation account and credit ROE asset account. At the payment, you have to debit the lease liability account for the first year and give credit to bank 20,000 rupees. Okay, so like this you have to do for 3 years. So if you do all the entries for 3 years, the summary will become like this. So initial ROE asset is 77,364 and liability is 77,364, and year one payment is 20,000. So from 20,000 you can the lease expenses needs to be adjusted. So for interest expenses 9284 and depreciation is 25,788. So this much will be charged to P&L account. So from ROE asset you can subtract the depreciation, you will get the closing ROE asset, and from lease liability you can add the interest expense and subtract the lease payment, you will get 66,648. So that's the ROE asset and liability as of year 1, and year 2 you are making subsequent payment of the 30,000, and interest expense will be debited to P&L and depreciation also will be debited to P&L. So 33,786 is the total charge to P&L, and remaining ROE asset is from 51,576. You have to reduce the depreciation, you will get 25,788, and lease liability is from 66,648. You have to add the interest expense and subtract the lease payment of 30,000, you will get 44,646. Similarly for the third year you are making 50,000 payment, and the interest expense and depreciation will be the charge to the P&L, and ROE asset from 25,788 you have fully depreciated. So depreciation if you reduce, you will get zero ROE asset, and lease liability also from 44,646. If you add 5,354, that's the interest expense minus 50,000 lease payment, you will get a zero lease liability. Okay, so here next example we'll go through how the lease modification needs to be accounted for. So in this example, company EFG enters into a property lease with entity H. The initial term of the lease is 10 years with 5-year renewal option. The economic life of the property given as 40 years, and the fair value of the leased property is 50 lakh rupees. So company AEFG has an option to purchase the property at the end of the lease term at rupees 30 lakhs. The first advance annual payment is 5 lakhs with an increase of 3% every year thereafter. The implicit rate of interest is 9.04%, and entity H gives company EFG an incentive of rupees 2 lakh payable at the beginning of year 2, which is to be used for the normal tenant improvement. Okay, and company EFG is reasonably certain to exercise the purchase option. So now how would EFG measure the right to use asset and liability over the lease term? So in this example it's a bit peculiar that there is a right to purchase option is available, and lessee is reasonably certain that he will exercise the right to purchase the leased property at the end of the lease term. So in this case you have to note, it's an important note. So in case of purchase option available to lessee, and lessee is reasonably certain to exercise this option, Then under Ind AS 116, the ROA asset and ROA liability still to be created, including the purchase option payment. And then life of the asset to be taken as the economic life of the asset and not the mere lease term. So these are the two additional points you have to take care when there is a purchase option available. So I will repeat, in case of purchase option and the lessee is reasonably certain to exercise the purchase option, then the ROA asset and liability to be created, including the purchase option payment. So in this case, the purchase option payment, in this example, it is 30 lakh rupees. So it's given that the company FG has an option to purchase the property at the end of the lease term for 30 lakhs. So this 30 lakhs is the consideration to be paid to exercise the right to purchase the property. And another important term is the depreciation needs to be calculated over the economic life and not the lease life. So in this example, the economic life is given as 40 years and lease term is 10 years. Since at the end of 10 years, the property will be purchased, then the property lessee can use that property for 40 years. That's the economic life. So the depreciation from beginning needs to be calculated using the life of 40 years. Okay, so let's go through how the lease liability and leased asset should be calculated. So here you have all the 10 years and every year there is a payment of 500,000 and 500,000 will be increased by 3%. It's given that the 500,000 will be increased by 3% annually. They have given 3% annually. So your lease payment should be 500,000 and second year will be 500,000 plus 3%. But in the second year they are getting incentive of 200,000. So second year alone that 200,000 is reduced. And third year will be 515,000 into 1.03, you will get 535, 450. That multiplied by 1.03, you will get this. So like that you will have to take 1.03 every year increase. And year 10 you have 2 times. So this is the normal lease rent. And the second year 10, 30 lakh rupees is the payment to be done to exercise the right to purchase this property. So sum of all those things comes to 85,31,940 is the total payment towards lease and exercise the purchase option is being done by lessee. Okay, so now this can be allocated between principal and interest. Okay, so first we will calculate the interest. So interest will be, so initial lease liability is 50 lakh rupees. Okay, on 50 lakh if you calculate interest, you will get at 9.04%, you will get 4,06,800, and the principal payment for the first year is 5 lakh rupees. So your closing lease liability will be 50 lakh plus 4,06,800 minus 5 lakh, you will get 49,06,800. Okay, and this 49,06,800 will be the opening balance for year 2, and year 2 interest on 49,06,800. If you apply 9.04%, you will get 4,15,099. Okay, and then your closing lease liability will be your opening balance plus lease expense minus your payment 3,15,000. So you will get 50,06,899. So this will become opening balance for the next year. So like that every year you have to calculate. Okay, so your total interest expense will come to 31,940. Only thing, the interest is getting paid 1 year later. So first year interest expense will be paid in second year. Second interest expense will be paid in the third year. So like that interest payment is deferred by 1 year. So that also you have to take into account. Okay, so finally the ROA assets and liabilities created for 50 lakh rupees. That includes your right to exercise the purchase option. And your depreciation should be calculated over 40 years. So 50 lakh divided by 40 years, your yearly depreciation will be 1,25,000 rupees. Okay, so we'll go through a few more scenarios on lease modifications. So the lease can be modified in three ways. One, there is an increase in scope but not a separate lease. So within the same lease agreement there is increase in scope, and second, there is increase in scope but a separate lease is entered, and third is decrease in scope. So all these three could be possible. Okay, we'll go through few examples and each scenario. So in this example I tried to cover most of the scenario. Okay, maybe you can go through this question and then I'll try to run through this with you. This is a bit important example, so please watch this video very carefully. You might get some exam sums from this chapter. Okay, so in this question, there is a original lease term for 2000 square meter office space, and lease term is 10 years, and lease rental is 1 lakh yearly, and interest rate is given as 6%. So that was the original lease term. And there is an amendment entered after 5 years. At the beginning of 6th year there are some amendment, and the first amendment is initial 1500 square meter is increased, and the lease term is reduced from 10 years to 8 years, and the consideration is increased from 1 lakh to 1,50,000, and interest rate is changed from 6% to 7%. So these are the modifications happened. So it's a multiple modification happened in this example. And lessee decided not to keep 1500 square meter lease as a separate lease, as the additional rent 50,000 is not a market price. So which means it is not an additional lease. So existing ROA assets and liability needs to be adjusted for these modifications. Okay, so generally for lease modifications you have to follow 4 steps. Okay, for any example you have to follow 4 steps. 1, calculate the ROA assets and liability as on the date of modification. So what is the based on the original term, what is the ROA assets and liability balance as on the modification date? So in this example we have to calculate what is the ROA assets and liability balance at the end of 5 year or at the beginning of the 6th year. That's the modification date. Okay, and on the effective date of lease modification, lessee remeasure the lease liability. So we have to remeasure the lease liability as on the effective date of modification. And in this given example there are 3 modifications. 1, lease term is reduced from 10 to 8 years. So we have to calculate what is the impact of lease liability and asset on account of reduction of this lease term. And lease rent is increased from 100,000 to 150,000 yearly. So we have to calculate what is the impact on account of this modification. And discount rate is increased from 6% to 7%. So we have to calculate what is the impact on account of this modification. And all 3 modification together you have to give impact to the ROA assets and liability as on the beginning of 6th year. Okay, so let's see how each of this needs to be calculated. So as a first step we have to calculate what is the ROA assets and liability as on the effective date of the modification. Okay, so for that you have to calculate what is the initial measurement of the lease assets and lease liability. So initial measurement will be calculated like this. So it's given that 100,000 is the yearly rent and 6% is the initial interest rate. So if you take 6%, the first year discount rate will be 0.943, that is 1 by 1.06, and first year present value of 100,000 will become 94,300. Like that, if you calculate everything and sum up the present value of all the 1 lakh payment for the next 10 years, you will get sum of 7,35,900. So your total will be 10 lakh, but present value is only 7,35,900. So that 7,35,900 will be the initial lease liability and the leased asset, ROA assets and ROA liability. Okay, so then for the first year the interest expense will be 44,154, that is 6% on 735,900, and lease payment is 100,000. So your closing will be 6,80,54. That becomes opening next year. So on opening of second year, if you another calculate 6%, you will get 4803. So like that every year you have to calculate the interest, and every year the lease payment is 100,000. So your closing balance at the end of fifth year will become 421,090. So that's the value and the value of lease liability as on the effective date of modification. Similarly, your ROE asset is 73500 initially, and you are depreciating over 10 years. So on a straight line basis, so every year depreciation will become 73,590. So at the end of fifth year, you will have 367,950 as the depreciated ROE asset balance. Okay, so this is how you're done with step 1. Then in step 2, you have to remeasure the ROE liability considering rent at 150k, and for the term is 3 years. That is for 6th, 7th and 8th year, and at the revised discount rate of 7%, what should be your lease liability? Okay, so this 1, 2, 3, basically you can take this year 6, year 7, year 8. So year 6 you will pay 150,000, year 7 you will pay another 150,000, year 8 you will pay 150,000 after modification, and your present value needs to be calculated 7% and not 6%. So 1 by 1.07 you will get 0.935, and 0.935 divided by 1.07 you will get 0.873, and 0.873 divided by 1.07 you will get 0.816, and 150,000 multiplied with present value will get 140, 250, 130, 950 and 110 to 400. So sum of all these three, you will get the present value of 4,50,000. That's the rent to be paid for 6, 7 and 8 years. The present value is 393,600. Okay, so 393,600 should be your opening revised lease asset and lease liability at the beginning of year 6. Okay, and probably this 393,600 you can allocate for 50,000. That's the addition you have to pay, and for 100,000 that's the existing one. Okay, so out of 393,600, 131,200 is from the increase in lease rental, and 262,400 is the base lease rental as per the original term. Okay, so now you have to make the adjustment to ROE liability. That's step 3. So the ROE liability needs to be adjusted. Okay, so from step 1 you can see your original ROE liability is 421,090, and original ROE asset balance is 367,950. So you can see from here this 421,090 and 367,950, that should be your original closing balance. Okay, now we'll have to calculate the revised closing balance. Okay, so balance for remaining 3-year balance should be 267,300. So how this 267,300 comes? If you take as per the original term, you have to pay 100,000 every year and 6% to be depreciated. So if you calculate this 3 lakh rupees present value for the for 6, 7, 8 years, you will get 267,300. So that should be your closing balance. Okay, so the excess you have 153,790, that needs to be reversed. So basically this 421,090, it's for 6, 7, 8, 9 and 10, but 6, 7 and 8 it should be only 267,300. So 9 and 10 it's 153,790. Since you are modifying the lease or reducing the lease term from 10 year to 8 year, you can reduce the ROE liability by 153,790. Similarly, ROE asset, this 367,950, that's for remaining 5 years, but now you are going to keep only remaining 8 years. So you can keep 220,770, and balance 147,180 needs to be reversed. So that's the one adjustment entry. Okay, so the entry here, so your liability will be reduced to be 153,790, and your asset is reduced to be 147,180, and the delta you can make it to park it to P&L as gain on the modification of lease. Okay, that's the first effect. And second effect you have to give for the change of the interest rate from 6% to 7%. Okay, so if you calculate 100,000 by discounting 7%, in the same manner you will get 262,400. But if you discount at 6%, you will get 267,300. Okay, so the delta between these two is 4,900. To this extent, you can reduce your ROU liability. So for this, the entry is debit ROU liability and credit ROU asset by 4,900. Okay, then you have to calculate the effect due to increase in rate. Rent is increased from 100,000 to 150,000. So for the 50,000 rupees increase, if you calculate at 7%, you will get present value of 131,200. For this 131,200, you have to calculate the additional ROU assets and liability by debiting ROU assets 131,200 and crediting ROU liability by 131,200. Okay. So this is how your closing balance will work out. So you are restating the ROU opening balance to 393,600, and then you are calculating interest at 7%, and you make revised lease payment of 150,000. So you will have closing balance 271. That becomes opening for next year. Next year rent at 7, interest at 7% is 8981. You are further paying 150. So your closing will become 140. And 140 is the next year opening balance. On 140, 7% is 9867. So now we are paying fully 150,000. So your closing ROU liability will become 0. Similarly, ROU asset also, you have to start at 347,070, and then you are depreciating equally over the next 3 years. So at the end of the 8th year, you will have closing ROU asset at 0. So let's see how this 393,600 is calculated. So basically your opening ROU liability at the beginning of 6th year is 421,090, and the effect from reduction of the lease term from 10 to 8 years 153,790, that needs to be reduced. And then the interest rate change effect, that is 4,900, that needs to be reduced. And then effect due to increase of rent from 100k to 150k, that needs to be added. So your revised ROU liability will become 393,600. Similarly, ROU asset 367,950, and the effect of reduction from 10 to 8 years 147,180, and then the effect of interest rate change is 4,900, and the effect of increase in rent from 100 to 150k is 131,200. So your revised ROU asset is 347,070. That's what we are taking here. Okay, so probably you can also go through this example as a homework. Maybe read these questions. I have also given the solution here. So I'll just quickly run through. Maybe you can pause and then note if you wanted to go through a few concepts here. Okay, I have given some 4-5 homeworks here. Probably you can do, and please give some comment if you want something needs to be explained furthermore. So all these examples follows the previous example what we have already seen. So should not be a problem. You have to just go through in detail, step by step, and then try to work out on your own. Okay, I think I have given another one example. So with that, I will try to conclude today's class, and in the next class I will try to work out on how these lease needs to be accounted in the books of lessor. Okay, thank you. We'll catch up then.